Secretary Geithner, um, you have three options that have been presented, and I guess what you're saying is any of these three would be acceptable to Treasury.
No, I wouldn't say that.
Tell me about option one. Option one, as I understand it, complete privatization except FHA available to medium income families only. That's similar to the Republican plan, except the Republicans don't want any FHA. In this plan, if you're slightly above medium income, likely there would be no 30-year fixed. You have higher down payments, higher interest rates, and of course adjustable rate short-term loan would be the norm. What is your position on the 30-year fixed rate mortgage?
I think under option one, if I understand your question, a 30-year fixed rate mortgage would be more expensive and harder to get than would be true under some of the other variants you could consider.
But it would be acceptable to you if we adopted option one?
No, I would not say that. I think the disadvantage of just option one, just to be fair about it, is that you would leave the government of the United States with a more limited set of tools to protect the economy and the sort of innocent victims in the face of the next severe recession. And that is a disadvantage of option one, unless under option one you allow the FHA in the crisis to dramatically expand what it does. And if you do that, then the taxpayer will be more exposed to loss, because what the FHA does is they provide very high loan-to-value mortgages, very low down payment.
So I'm to understand that this is not your choice. You're not saying that this could be as acceptable to you as any other option.
I would say it has some disadvantages the other options do not have. And again, careful that you look at all those, at those advantages, disadvantages. And again, I would caution people on this side of the aisle to say that it'd be tempting to look at the FHA-only option and say, oh, the government's role will be more limited in that context. But that is not necessarily the case, because what it means is that all the risk is with banks. The government does provide support to banks. The guarantee is then implicit. The government doesn't pay for it. The taxpayer is not necessarily better protected. And if your only option in a crisis is have the FHA scale up dramatically, the taxpayer is much more exposed to risk on an FHA product than it would be in those other options. So don't look at that as such an appealing option. It looks like it's a more private solution, but it may not be in the end.
Let me just, I want to get something into the record here. The Financial Crisis Inquiry Commission examined loan performance and found that mortgages bought by Fannie Mae and Freddie Mac were more likely than privately purchased loans to require a significant down payment when borrowers had weak credit and were less likely to default. For instance, GSE mortgages with a down payment of at least 10% had a serious delinquency rate of 5.7% in 2008, compared with a delinquency rate of 15.5% among mortgages in private label securities, the FCIC found. Do you agree with that?
I think it's true that the underwriting standards in the private market were worse than the underwriting
Okay, let me continue. Mortgages originated for private securitization defaulted at much higher rates than those originated for Fannie and Freddie securitization, even when controlling for all other factors. Overall, private securitization mortgages defaulted at more than 6 times the rate of those originated for Fannie and Freddie securitization. And I guess this is a study that was done entitled Securitization and Mortgage Default, Reputation versus Adverse Selection, Federal Reserve Bank of Philadelphia, September 2009. Are you familiar with that?
I'm not familiar with that study, but the general pattern is correct, which is that the quality of underwriting standards in the private market was, on balance, worse, less conservative, less careful than was true on the Fannie and Freddie guarantee book.
You have alluded to the exposure to the taxpayers under the systems that as we know them now, and you have basically concluded that it would be better to have the private market rather than the government guarantee. And if this is true, what I just read, and you agree with it, how is that so?
No, I would say a little differently, which is I say right now, the government is doing 90% of new mortgages. That is unnecessary. It's necessary today, but it is not necessary in the future. It would not be desirable for us to preserve that system. You want to have a system where the private market plays the larger, the more dominant role. Not the only role,
But it's a more riskier role.
no, not necessarily, because it depends
Vice,
a little bit.